All right, good afternoon, everybody. This is Todd Mitchell for Thursday, January 7th, and we're looking at the bond market. The bond market sold off hard today after the overall market opened up a lot lower. Of course, bonds flight to quality. Market opened up higher, and then we've been trading down. Well, let's say it opened up at 820 right there. It opened up here. We dropped. This is where I'm long. Let me show you exactly what I'm doing here. Let me get my pen and show you. A little off here. I was a little premature, did not follow my own rules, but I knew that the market would bounce significantly at some point down in here. And so when the market dropped, I wanted to wait for a hard low to be put in place, which was right here. Okay? Obviously didn't know that as it was coming down. It stopped here though, rallied up. And when the market came back down to test this low, everything lined up to go long. So I bought 5 here, which I'm down a little bit there, but then I'm long right in here as well, 5. So my average price. So as you can see, I am currently long 10 contracts, up $1,500, which so far a really good trade. So what I'm going to go ahead and do is I'm going to go and take off just half the position right now. All right, I will be back in a second. All right, so I've got an order in to sell 5 at 12, which means I would lose 4 ticks on my first entry. And my second entry, I'm long at 154.30, which means I'm up 12, 13, almost a half a basis point on my second entry. So I just need this market to push up a little higher, hit 12, get me out of half of the position, which what you'll see here is a loss because it'll average and take the loss from the first position. All right, there we go. So it shows that I am down $625, right? I close out $625 on 5, but I'm up $2,100 on my second entry right in here. Okay, does that make sense to everybody? And for those of you that have not signed up for my Forex class on Saturday, I urge you to do that. I'm really excited for it because I know a lot of people are interested in trading the Forex market, especially at night because a lot of people work during the day, right? So I've put together a class that I think you would love, and it will give you an opportunity to trade at night. Again, especially for those of you that work during the day and can't find any time to do any type of shorter term trading. So I've got a really good class. So hope to see you there. Let's just see how this pans out. What I'm going to do is I'm going to look to take off, let's do this. Let's take off 2 at the market, lock in some. That'll leave me with 3, and I'm going to try to, let's just do this. Let's just do 2 at the market. This market, right? We want to sell 2. Right? Okay, I have no clue. Hold on one second.
Order filled.
All right. So now I'm up 187 only. Right? On 2. See what we're doing here. We've got 3 left. This is where the big money will come in play. If I were to get out now, we would be up quite a bit. But I got to exercise a little patience. I mean, there's no doubt right now, right here where the market's sitting, there is resistance sitting here. Okay? And this market could break back down to the downside. So I want to protect myself here. What I want to do is I want to go, let's see, we're trading at 12. See, but we've also got, there's also a good chance that this market could continue moving higher because the S&Ps, believe it or not, let me just show you the S&Ps right now. Let's see if you can see this chart. I'm sure you can see this chart really well. Look at the S&Ps. Opened up lower, rallied considerably, and we've actually we've created an inverted V. We're all the way back down. We've taken out the low of the day. Okay? So that's why we're seeing a nice rally in bonds right now. Look at this. So we've cracked up through 13. We're at 15 right now. So if this market, if the S&Ps can continue to drop, these bonds are going to continue moving higher. Man, look at this. All right, so we're at 15 right now. 17 right now. So this is strong. We're reversing. So I want to trail this up. Look at 18 right now. This is beautiful. Beautiful, beautiful, beautiful. Okay, let's do this so we can really see the ticks here. Okay, so what I'm going to do is I've only got 3 contracts left, but I'm up $1,875 on those 3 contracts. I've locked in 187, okay? So look at 19 now. Huge run. So now I'm going to be really aggressive in trailing up this stop. I'm actually going to go 155.14 on the remainder. 155.14. Like that. 155.14. Got a big bar here. I would call this probably an expanded range vertical bar, which means it's the largest range bar. Look at this, 20. So I'm going to go up to 15. I hate giving away profits or giving back profits, but that's what you're essentially doing when you utilize a trailing stop to try to milk it for what it's worth. Love it. All right. Look at 20. So I'm going to pause this video and see what we can get. I'll probably move it up to 16 and only before tick. Look at 21. Just tick to 21. Let's go up to 16 now and lock in some more profits. Oop, that took it out. So let's just go 16 right there. Put that back in 16. We hit 21. Every time it ticks higher, I'll move it up. So we hit. So it's got to hit 22 to go up to 17. So essentially we are trailing it by 5 ticks. 5 ticks. Usually when I use a trailing stop on the bond market, a 5-tick trailing stop every time you would move it up, right? So again, the high of this bar is 21, so we're at 16. If we were to go to 22, I would move it up to 17. 5 ticks. Okay, so I'll be back. All right, I am back. The market traded up to 22, so I'm up to 17 now. So this is a really, really nice trade from this long. Of course, I was completely wrong on this right in here, but I've got my rhyme and reasons for things. And again, all this is taught in my bond program too. And look at, we've gone up to 23 now. So let's move this up to 18. Okay, we're 18. High is 23 on this rally. So again, we're trailing at 5 ticks down. Okay, if we go to 24, we'll move it up to 19. So this will end up being a really big trade. Okay, we just hit 24, right? Look at this. Oops. So we just hit 24. So we're going to move it up to 19. Move the trailing stop to 19. All right, 19. This is nice. Again, market is falling out of bed. The S&Ps are falling out of bed right now, which means the bonds are going to continue to rally. Look at that, see? Straight down. Look at all these. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive price bars where we've made lower highs and lower lows, straight down. No reason to think. I mean, this is definitely getting short-term exhaustion. This market should kind of bounce, but what we're going to do is be patient here. Let's see, is it high still 24? 24. All right, so we're at 19. That's good. If we're stopped out at 19, that's a really, really nice trade. Remember, we're long from 30, so that's 21 ticks. Nice trade. Nice trade. All right, I'm going to pause this video, and I'll be back. All right, I am back, and I was taken out of that trade at 19. 19 took me out. Look at this. Nice trade. So we netted out $2,156 on that. Again, entered here, a little premature, and then this one was just absolutely beautiful. Caught a huge move there to the upside. So down to 17 right now. So that was a good trade. So again, for those of you that have not signed up for my Forex workshop this Saturday, I urge you to do that. I think you'll get a lot of information that you can start using on Monday, actually, okay? Have a great day. Hope this video helps. Bye for now.